today's number could have an impact on the housing market. Joining us now, Hessam Nadji, President and CEO of Marcus Millichap. Hessam, tighten it up together. Like, bring the two together, jobs and housing. I get it. You got to work to pay for a home, but how closely are they related?
They're very closely related, Brian. Good morning. Great to be with you. We've seen the underpinning of this entire cycle, 21 million jobs added since the expansion began, be the main reason why commercial real estate, residential real estate, all forms of real estate have performed very well. But the more important part of the jobs number isn't just what this month is going to show. It's the fact that we've added those 21 million jobs, Brian, with very little inflation. As worried as everybody is about Fed action, you have to remember the PCE is still well below 2%, 1.7%. We've had a lot of interest rate hikes already that's working the way through the economy, so we expect some slowdown in jobs going forward. But even if we go from 2.8 million in the last 12 months to something like 2.2, 2.3 million in the next 12 months or even lower, the demand for housing, both for sale housing and rental housing, is at record levels. And supply has been pretty constrained too, so the two are working very well together.
And how are you seeing housing right now, Hessam? A lot of mixed data points out there.
There for sure. On the for sale housing trend side of it, it's been a slowing trend over the past few months for sure. We've seen prices rise so much that in a lot of the metros, you've seen sales pull back. And the real story on housing continues to be the rental market, because consumers prefer to rent. The burnout from the last, the financial crisis and the last recession never really went away. Plus, you have a lot of young people coming into the economy, the 30-somethings, and even the 40-somethings that are capturing a lot of professional and business service jobs in urban areas who prefer to rent. And on top of that, we've seen lifestyle choices, older folks selling their homes and opting to rent versus buy to stay flexible. That all spells a lot of strength for the rental market.
Yeah, but the odd thing is this, Hessam, if we get a, quote, bad jobs number, then maybe the Fed stays on hold. You just heard us talk about it. Nothing more important to housing, aside from jobs, than interest rates. We also want interest rates to stay low, do we not?
We absolutely do, and increases in interest rates last year really did put a hole in the momentum of the for-sale housing market. But the demographics and the consumer preferences are so strong toward rentals that even if we get a break on the interest rate side of the equation and the Fed continues to stay on a pause, I just don't see the balance shifting back toward people preferring to buy suddenly versus rent, because it's much more of a societal and lifestyle issue and factor than it is, short-term interest rates.